Hey there, financial detectives. Crimes are being committed every day, and while most of them are investigated by regular detectives, there are those that need the expertise of forensic accountants, truly smart beings who specialize in uncovering embezzlement schemes, unmasking fraud, and untangling complex financial webs. From high-profile corporate scandals to crafty con artists, we'll take you behind the scenes of these riveting investigations and witness the masterful work of financial sleuths in action. So bear with us as we get into this world of crime and see some of the most famous forensic accounting cases. The AIG scandal. The insurance giant American International Group, also known as AIG, was caught up in a scandal when back in 2005, the SEC filed charges against the company and CEO Hank Greenberg for committing security fraud. See, the multinational, which had been managed by Greenberg ever since 1968, came to the brink of existence in the mid-2000s due to bad investment decisions. However, in order to deceive its investors and the American government, AIG fabricated its financial statements using a number of fictitious transactions to present analysts with a falsely optimistic view of the company's financial performance. It was discovered that during the years 2004 and 2005, the company had gotten into business with Capco Reinsurance Company to help them bury about $200 million of underwriting losses. But that's not all. AIG was basically a central player in the financial crisis of 2008 and had to be bailed out by the American government, which lent them $180 billion to avoid bankruptcy. Sadly for them, it was soon discovered that high executives and employees of the company had received $165 million in bonuses from that money, which of course outraged the American people. Eventually, over half of that money was returned, and Greenberg would settle with the SEC for $1.6 billion while avoiding prison time. The Tesco account scandal. In September 2014, one of the UK's largest supermarket chains, Tesco, admitted to accounting irregularities. See, the British giant was not doing very well financially, so in order to cope with the loss of profit, Tesco began booking payments from suppliers before money had been paid. This led the company to overstate its profits by a staggering £326 million, thus deceiving its investors and shareholders while committing fraud in doing so. Of course, this would soon be discovered, and a thorough investigation was launched. As a result, several top executives were ousted from their positions, and the company faced heavy fines and legal repercussions. But that's not all. Tesco's mistake proved to be harmful for the company when the food retailer lost £2 billion in value in just a matter of hours. The multinational has been trying to recover ever since, but seems to be having a hard time in doing so. The WorldCom fraud. WorldCom, once the second largest long-distance telephone company, was also involved in an accounting scandal back in 2002 when it was discovered during an audit that the giant in telecommunications had orchestrated a scheme to inflate its earnings and remain in the stock market. See, the company had reached the peak of success during the 90s and was about to merge with another telecommunications company called Sprint for about $115 billion. However, such a merge was shut down by the U.S. Justice Department. That and the decline in business during the year 2000 caused the company to lose quite a lot of money and struggled to stay afloat. As the situation worsened, executives decided to commit fraud and try to disguise the reduction in earnings to stay in the stock market. But it was all discovered in 2002 when auditors inside the WorldCom organization began to examine the company books for signs of fraud and discovered over $3.8 billion in fraudulent entries. CEO Bernard Ebbs was taken to trial and got sentenced to serve 25 years, but got released in 2019 only to die 1 month later. The Royal Bank of Scotland. The Royal Bank of Scotland, once the world's biggest bank, also had its share of scandals over time. But perhaps one of the worst occurred during the mid-2000s when the bank deliberately sold complex financial products to customers. One of those products was the payment protection insurance, a type of insurance usually sold alongside loans, credit cards, and mortgages with the promise of providing coverage to borrowers in case of unforeseen circumstances like illness, job loss, or other emergencies. The RBS would engage in aggressive and deceptive sales tactics to push this product onto customers who often did not need or want the insurance. More specifically, they would avoid providing adequate information to customers about the cost, terms, and limitations of the insurance, leading many borrowers to unknowingly pay for a product they could not benefit from. As a result, millions of customers were affected. facing unnecessary financial burdens due to the missold policies. It wasn't until 2008 that forensic accountants discovered the misselling and people involved had to face the consequences. It's estimated that the PPI scandal caused the RBS a loss of £5 billion. The Health South Corporation scandal. The Health South Corporation was a healthcare services provider that, much like other cases discussed in this video, got into trouble for inflating its earnings and committing fraud. This had all been orchestrated by its founder and CEO Richard M. Scrushy, who between 1996 and 2002 decided to artificially inflate the earnings of the company by over $2.7 billion, deceiving investors, analysts, and regulators. The fraud involved fictitious entries, forged documents, and false revenue recognition, all aimed at creating an illusion of financial health. In 2003, the scandal came to light when the SEC and FBI launched an investigation and ended up putting Scrushy behind bars as he was sentenced to 6 years and 10 months in federal prison. The New York pharmacy and COVID-19 fraud. COVID-19 was but a sad moment in history that cost the lives of millions of people all over the world. And yet, the saddest part is that there were those who profited and committed crimes during this time of need. One of these cases involved two New York pharmacy owners named Arkady Kayamov and Peter Kame. The men owned over a dozen pharmacies in the New York area through which they submitted fraudulent claims by expensive cancer medications that were never prescribed or dispensed to patients. As a result, the pharmacy owners managed to obtain over $18 million from Medicare reimbursements. The owners intended to conceal that money through several shell companies, but were discovered and had no other choice but to plead guilty to fraud. They faced a sentence of 20 years in prison for their crime, but were fortunate enough to only be sentenced to spend 4 years and 3 months behind bars. The Enron scandal. The Enron scandal, one of the most infamous corporate debacles in history, unfolded in the early 2000s, shattering the reputation of an American energy giant. It was discovered they had been manipulating financial statements and creating off-the-books entities to hide mounting debts and losses. The SEC launched an investigation and discovered Enron had been hiding over $1 billion of debt in their financial statements. The scandal broke out and Enron's stock prices plummeted, going from $90 per share to less than $1 by November 2001. This resulted in shareholders losing over $11 billion in shareholder value and caused thousands of employees to lose their jobs and retirement savings. The company filed for bankruptcy, and its CEO Jeffrey Skilling was sentenced to serve 24 years in prison. Paul McCartney's divorce. Paul McCartney, once part of the most beloved band in the 60s, the Beatles, also faced a difficult moment when he and his now ex-wife Heather Mills divorced in 2008. The couple had been struggling to keep the relationship alive for years, but nothing seemed to work. So the best way to proceed was to end the marriage. But Mills was not planning on leaving empty-handed, so she took the case to court and asked for $250 million from her ex-husband's money. However, the judge ruled in McCartney's favor and stated that the claim was exorbitant. Mills still got about $50 million from the divorce, but did not feel happy about it. So, she told the press she would hire a team of forensic accountants to examine her former husband's finances. Mills' intention is to prove that McCartney lied about only having a net worth of £400 million when in reality he could be worth no less than £800 million, which translated to US dollars goes above the billion mark. If this were to be proven, McCartney would certainly face legal problems for fraud. Bernie Madoff's Ponzi scheme. Bernie Madoff was once considered a legend in the world of investments. But how did he go from having the respect and admiration of thousands of people to becoming the most hated man in America? Well, simple. The former NASDAQ chairman ran one of the largest Ponzi schemes in history and left thousands of people and families without money. You see, Bernie Madoff was very respected in the world of finances. People wouldn't think twice when it came to trusting their money to him because they knew they were going to get a big return. And so the scheme began. Basically, Madoff's reputation allowed him to gain thousands of clients who'd invest millions and some even billions in his company, thinking he'd invest in the stock market and make a profit to offer a higher return. But in reality, he would just place that money into a bank account and use newer clients' investments to pay his older clients. The scheme worked for over 15 years and made Madoff about $20 billion. But it all fell apart when the 2008 world financial crisis hit and everybody wanted to pull his money out. Madoff stopped getting clients, and so he was unable to continue paying his investors. In the end, he was sentenced to serve 150 years in prison and behind bars in 2021. Al Capone. You know how many mobsters avoid serving time in prison for their crimes? Well, Al Capone was one of those guys. He would avoid being nailed for serious crimes that included, but were not limited to, ordering hits, narcotics trafficking, prostitution, etc. It would seem as if he was never going to be caught. And then, forensic accounting happened. See, Frank Wilson, a forensic accountant for the U.S. Treasury Department, conducted an investigation on the mobster's finances and discovered that Capone had been hiding hundreds of thousands of dollars. So he was nailed for tax fraud and was sentenced to 11 years in prison. He would never see the light of day again, as he died in Alcatraz at the age of 48. And that's all for today. Do you know of any other financial accounting cases that were not on this list? Let us know in the comments below. And as always, don't forget to subscribe, like, and share this video with your friends. Thanks for watching, and see you next time. Digital forensic science is a discipline that applies computer techniques and tools to analyze, preserve, and present digital evidence in cases of crime or fraud. In this video, we present top 10 cases solved by digital forensic analysis, where you will see how this science has helped a lot to find truth and bring justice. Do not miss it. The Craigslist killer case. In this order of ideas, we need to talk first about the Philip Markoff case, also known as the Craigslist killer. Philip Markoff was a medical student who targeted women who offered sexual or massage services on the Craigslist website. Markoff made contact with his victims by email and then met them at hotels where he robbed and assaulted them. During one of these encounters, Markoff took the life of Julissa Brisman, a 25-year-old masseuse, by shooting her 3 times in the chest. Digital forensic analysis was so fundamental in this particular case to identify and apprehend Markoff. It was possible by tracing his IP address, retrieving the messages he sent to victims, and finding the evidence on his computer and cell phone, including photos, fingerprints, and DNA. Markoff was charged with first-degree homicide, armed robbery, and kidnapping. However, he was never brought to trial, as he took his own life in his jail cell in 2010 by slitting his wrists and suffocating himself with a plastic bag. James Kent case. James Kent was a Marist College professor who engaged in cybercrimes involving infantile portrayal. Kent used his computer to download, view, and distribute thousands of illegal files containing images and videos of minors. He used to record and photograph the children he babysat in their homes or who were his students at a school in Madrid. Kent was used to share this material on forums and made montages of the images. Police confiscated his computer and found evidence of his crimes. Kent denied responsibility and said that a virus had downloaded the files without his permission. He asked for a digital forensic expert to prove his innocence. The forensic expert examined his hard drive and found evidence that Kent had deleted and viewed the files. The forensic expert disproved Kent and blamed him for the crimes. James Kent's sentence was one of the harshest ever imposed for this type of crime in Spain. The Supreme Court sentenced him to 135 years in prison for making infantile portrayal and crimes against moral integrity. The killer soccer mom. The case of Laura Moreno, also known as the killer soccer mom, was a crime that shocked Colombia in 2012. It was the death of Luis Andres Colmenares, an industrial engineering student who was found lifeless in a pipe in Bogota after a Halloween party. The main suspect was Laura Moreno, his girlfriend, and known as the soccer mom for being in charge of organizing the parties among the students. The prosecution accused Moreno and her friend Jessie Quintero of taking the life of Colmenares out of jealousy and faking an accident. However, the defense of the young woman managed to demonstrate that there was insufficient evidence to support this hypothesis and that the digital forensic analysis carried out by the police was full of errors and inconsistencies. After several years of trial, in 2017, a judge acquitted Moreno and Quintero of all charges and declared the Colmenares death was accidental. BTK killer case. The BTK killer case was one of the most shocking and chilling in U.S. criminal history. BTK was the nickname given to Dennis Rader, a man who committed 10 homicides in Wichita, Kansas between 1974 and 1991. BTK stands for bind, torture, and kill, which was Rader's mode of operation. The killer would send letters to police and the media to mock his crimes and give gruesome details of each one. However, after 1991, he stopped communicating and remained silent for more than a decade. In 2004, Rader again sent letters and items related to his victims which reactivated the police investigation. It was then that a fatal mistake was made that gave him away. He sent a floppy disk with information about his crimes to a local television station. Detectives were able to extract data from the diskette that led them to a Lutheran church where Rader was chairman of the board. Thanks to digital forensics, police were able to identify and locate Rader, who was arrested on February 25, 2005. Upon questioning, he confessed to being the BTK killer and gave details of his crimes. He pleaded guilty to all 10 homicides and was sentenced to 10 consecutive life sentences without the possibility of parole. The Breton case. The case of José Breton was one of the most mediatic and controversial in Spanish judicial history. Breton was accused of taking the life of his 2 children, Ruth and José, aged 6 and 2, following a custody dispute with his wife. Breton always claimed that he had lost the children in a park, but digital forensic evidence proved otherwise. Investigators found several deleted files on Breton's computer that contained searches on how to dispose of a corpse, how to burn bones, or how to build a bonfire. In addition, images and videos were recovered from the day of the crime showing the farmhouse where Breton burned his children with a large pile of firewood. This evidence was key to dismantling Breton's alibi and sentencing him to 40 years in prison for 2 counts of murder with malice aforethought. Matt Baker. Matt Baker was a Baptist pastor accused of taking the life of his wife Carrie in 2006. He claimed he found her dead in her bed after an overdose of sleeping pills. However, police suspected that he had strangled her and then faked his own death. The case was solved through digital forensic examination of several electronic devices owned by Baker. Investigators found evidence that he had searched the internet for how to commit homicide without leaving a trace, how to fake his death, and how to delete his browsing history. This data was crucial in proving that Baker had a motive and a plan to end his wife's life. In 2010, he was convicted of involuntary manslaughter and sentenced to 65 years in prison. Lucia's case. Krenar Lucia was a man accused of planning a potential attack causing terror in the United Kingdom in 2009. Police found several explosive materials in his home, as well as a laptop computer with information on how to make bombs and jihadist propaganda videos. Lucia defended himself by saying that he was a pyrotechnics hobbyist and that the videos were part of his research for writing a novel. However, digital forensic analysis showed that Lucia had deleted some files from his computer before the police searched it. In addition, Lucia was found to have visited terrorism-related websites and downloaded maps of potential targets. This digital evidence was key to Lucia being sentenced to 16 years in prison for preparing acts of terrorism. Munn's case. Michaela Munn was a college student who committed a heinous crime in 2016. She gave birth to her son in the bathroom of her dorm room without medical assistance or anyone to help her. She then took his life and left him in the toilet, covered with a towel. Munn's case was solved thanks to the work of digital forensic analysis experts who examined Munn's cell phone. There, they found evidence that she had planned ahead, searching the internet for information on how to give birth alone and how to dispose of a baby. They also found photos and videos of the moment of delivery and of the child's body, which Munn had taken with her cell phone. Munn was tried and convicted of manslaughter and infanticide in 2019 and received a 65-year prison sentence for her inhumane act. Leaked Navy documents. The case of Hassan Abu Jihad was an example of how digital forensics can help solve espionage and terrorism crimes. Abu Jihad was a U.S. Navy sailor who, in 2001, leaked classified information about the movement of a naval group that was to conduct missions against al-Qaeda in the Persian Gulf. The information was sent to Azam Publications, a London-based organization that supported attacks against Americans through websites and email communications. In December 2003, British police found a floppy disk in the home of one of Azam publication operators. Forensic analysis of the diskette revealed a password-protected Microsoft Word document containing classified information that Abu Jihad had provided. The document also suggested possible targets and tactics for attacking U.S. ships. That digital evidence was key to identifying and arresting Abu Jihad, who was sentenced to 10 years in prison for disclosing information related to national defense. The Boston Marathon case. It was one of the most shocking acts of organized terror in recent U.S. history. On April 15, 2013, 2 homemade explosives detonated near the finish line of the race, killing 3 people and injuring more than 260. The investigation to identify and capture those responsible was a challenge for the authorities, who turned to digital forensics as a crucial tool. Thanks to images and videos captured by security cameras, cell phones, and the media, it was possible to reconstruct the route and actions of the suspects, two brothers of Chechen origin whose names are Tamerlan and Zhojar Tsarnaev. The digital forensic analysis also made it possible to trace the terrorists' communications and movements, as well as to find evidence of their radicalization and the planning of the attack. After an intense manhunt, Tamerlan was shot down in a shootout with police, and Zhojar was arrested and seriously wounded. In 2015, he was convicted of 30 charges, including the use of weapons of mass destruction, and sentenced to execution. This video showed you incredible cases solved by digital forensic analysis. Crimes, frauds, leaks, and homicides were discovered by computer forensic experts. Comment below which case was the most shocking to you. If you like this top, don't miss our next video. See you next time. See you next